In this lesson, we need to take the time to understand an important term that is used in calculating the value of your future stock picks: equity. This calculation is done on a very important document called the balance sheet, something you should know a little bit about if you have seen the previous videos in which we use the balance sheet to calculate the debt-equity ratio and the current ratio. You'll want to understand this document thoroughly if you want to do well investing in the stock market. The balance sheet is an important document because it shows the current equity of a business at a certain point in time, usually quarterly. If the company would liquidate or sell all its assets and pay all of its bills, the equity is what would be left. This equity is a starting point to understanding what a business is worth. To truly understand the balance sheet, I would highly recommend taking a class that completely focuses on understanding corporate financial statements. I can provide some links below to a few courses on Udemy that will help you gain an understanding on financial statements. Once you have grasped the concept of equity, now you can look at the term book value. This term simply means equity per share. When we take the company's total equity and divide it by the total number of shares outstanding, we get the book value, or equity per share. Total equity divided by total shares outstanding equals book value. So, when we take shareholders' equity, which in this case is $525,000, and divide it by the shares outstanding, which is 10,000 in this example, we get the book value, or equity per share, in this case $52.50. Shareholders' equity can be found on the company's balance sheet, and shares outstanding can be found on the company's income statement. Book value is really just a number we can reference. We know that if a company sold off everything and paid its bills, it should be worth the book value. In the next episode, we will go over a specific example on how to calculate book value using Amazon's balance sheet. In later episodes, we will go over how we use book value to determine if we should invest in a company or not. And I will explain why companies don't normally trade at the same price as the book value. If you found this video helpful, feel free to give it the thumbs up. If you have any questions, please ask them in the comment section below. Also, subscribe to our channel for more videos. If you really want to be cool, like us on Facebook and follow us on Instagram and Twitter. Thank you so much for watching and have a great day.